Pinigų ateitis, kaip ją pakeistų skaitmeninis euras, tokia bus mūsų pokalbio tema. The future of money, how will digital euro change it, or how would the digital euro change it? To discuss this, I will be joined by, I want to call you free banking proponent, senior fellow and director emeritus of the Center for Monetary and Financial Alternatives at the Cato Institute, professor emeritus at the University of Georgia, and many other important things that you have done. Someone who does have a special relationship with Lithuania and its money. We will talk about that further on during the discussion. Let me invite on stage, and everybody do give him a big round of applause, Mr. George Seljan. Welcome. Do take one of the seats, whichever is more convenient.
Yes, I was going to be in the middle then.
Okay, good. I'm going to also invite on stage President of the Lithuania Free Market Institute, Elena Leontieva, who is also the host of tonight. I realize I have not introduced myself. I am Živilė Kropaitė. I am with the Lithuanian Public Radio and Television, and I'm going to be talking about money. We will have a conversation. You will have a chance to ask questions at the end. I've seen there are some bankers, but not everybody, so I understand that there may be people who do not necessarily have a lot of knowledge about CBDCs, which will be the topic of today. So from now on, you will just know everything, I think. But Mr. Seljan, let's start with just a very brief comment. I have mentioned that you've been to Lithuania, you have contributed to processes, monetary processes in Lithuania, but just an opening remark. Aren't you shocked at how remarkably we have progressed in this country compared to the very first time we were here?
I'm not shocked at all. I know Elena, and so I expected nothing less to happen.
But the first time you were here was in 1990, right?
The last time I was here was 1991. The first time I was here was only days before the Free Market Institute was established. So it's kind of an anniversary for me too, a 33rd anniversary. I'm very happy to be back.
Congratulations. Let's start with a little bit of a general outlook. Money is undergoing a technological revolution, we might want to call it. Bitcoin, cryptocurrency, they have threatened the money per se, the status quo. Governments and central banks are also working towards their own CBDCs, which are central banks, digital currencies, right? Where are we in terms of money? Let's put us into perspective. Elena, maybe let's start with you, or shall we start with our guests? Where are we? What is happening with money in the world? Where are we?
Well, basically, we are in a situation where private innovators have come up with all kinds of new payments, techniques, and alternatives, some of them much more let's say, experimental than others, but quite a few that have actually been put into play. And some of them are very high-tech and very strange. Digital currency per se is actually not that high-tech. It's been around in some form or another since the days of the telegraph, which is about the 1850s in the United States anyway. But what we're seeing today is a concerted effort by central banks to be part of the more novel innovations involving various kinds of alternative digital currencies broadly understood. I think that central banks want to be part of this movement very, very badly. But it is a movement that started in the private sector you've all used various forms of high-tech digital transfers in ordinary payments.
But this is not digital currency.
But this is a kind of, these are digital currencies.
Yeah, because telegraph was as well, according
The telegraph's a digital currency. Every time you move money just by using electronic signals, you're essentially using digital money. So what central banks are proposing to do and experimenting with doing today, for the most part, is nothing all that special. That's the first thing you need to know about central bank digital currency. Because for the most part, all it consists of is various proposals and plans and actual projects to allow people, ordinary people I mean, rather than just banks, to bank with central banks digitally. We all bank with ordinary banks digitally every day, but we don't have accounts, and we haven't been allowed to have accounts at the central bank. The central banks usually just bank for other banks. The proposals that are being put forward with and experimented with are proposals to allow access directly of ordinary folk to central bank facilities so that we can directly bank with central banks instead of ordinary banks. Technologically, there is nothing new in these proposals. The term digital currency makes them sound radical, but the only sense in which they are is that they involve central banks entering the retail deposit business, which for the most part they have not been in the past. Now, they call this digital currency only because so far the only way we directly hold liabilities of central banks is in the form of their paper notes, paper currency. So since since central banks are now proposing that we hold other kinds of digital liabilities with them, they're calling it digital currency. But it's really just digital deposits, like the deposits you keep in your commercial bank today, that are held with a central bank instead. That's it. So the first thing you need to know is you should not be intimidated into thinking there's something fancy technologically going on here. There are lots of fancy technological things happening in the payments world, like Bitcoin and stable coins. Those are very complicated in some cases. But central bank digital currency, as it's being proposed, is nothing special. Whether it's a good idea or not is a different question, but what I've described to you, just accounts like your ordinary bank accounts, but directly at the central bank, is all that the Fed proposal involves, it's all that the Euro digital currency involves, it's all that most of these projects consist of.
As we're not fancy technological developments, Alana, what would you say? Is it a good idea? What is the Institute's position on central banks developing digital currencies?
Let me start with describing the idea a little bit more in detail, because many people call it crypto, central bank crypto. But it is not crypto, because crypto is based on blockchain and dispersed information, which is not centralized. This currency is not crypto. It is, so technologically, it's not much new from what we use today. And what is most important, that it changes the architecture of the banking system as we have it today. Because the main character of a central bank is to be bank of other banks. It was introduced as a bank of last resort, as a provider of credits, and so on. And the main prohibition of the central bank is not to deal with Givile or George. They cannot even deal with the companies. They should be like, they're like a ministry of banking and monetary system. So the basic change is in the architecture, because the central bank comes directly to our pocket and we will become directly clients of a central bank. This is the biggest change.
George, would you say, and I sense that you're going to say that there is a problem with that, with central banks coming directly into our pockets.
How did you guess?
You're not a central banker and not a central bank
right.
lover, not a Fed fan.
As soon as you understand that what central bank digital currencies consist of, as they are currently being planned, is just deposits being offered directly to the public by central banks, then it's easier for you to understand that this is obviously a competitive challenge to private banks. This is the central banks moving into a retail business that they traditionally haven't been involved in. And that raises the obvious, or should raise the obvious question, well, why haven't they been involved in that business all along? Why have they stuck to just providing paper currency and bank reserves?
Well, isn't the answer to that something like that? Fintech, as you said, fancy cryptocurrencies, having no legal or regulatory safeguards, they kind of pose a threat to the stability of economy. So central banks do come in and they say, the economy might become unstable because of it, and let's just create our own digital currency. And also because central banks appeared when money already existed, right? So now they just want to be fast and go with the flow and have something of their own. It completely makes sense, doesn't it?
No. It makes sense. It makes sense for them. And of course, they must have some good reason to want to do this from their own point of view. But let's again go back to what this stuff is. It's exactly technologically equivalent to bank deposits, which means that it cannot compete or drive out things like Bitcoin and stable coins any more than established commercial bank deposits can. Now, you might think there's a difference. What the proponents of CBDC are saying, one of the things they're saying, they say lots of things, most of which are wrong, and one of the things they say is, well, this is riskless, unlike your ordinary bank deposits. But of course, it isn't the risklessness of cryptocurrency and stable coins and these other dangerous innovations that makes them appealing. They're appealing because of privacy. They're appealing because they aren't official monies. You can't wipe them out by introducing bank accounts at the central bank. There's simply, that isn't going to compete. Those accounts aren't going to compete with these fancy, weird cryptocurrencies. They will compete with ordinary bank accounts because that's what they're close substitutes for. That's what they resemble. As for risk, they aren't any less risky. There's zero risk of default. But most bank deposit money today, because of insurance and also because of what are now exceptionally high central bank reserve backing ratios, are perfectly risk-free too for the vast majority of people. Do you know what the ratio of euro reserves, that is, reserves from the ECB, to deposits in the banking system today is in Europe, the euro deposits, and I mean all deposits, not just current accounts. Does anyone have a sense of what that ratio is? 5%, 10%?
Anyone?
0 points?
No. The minimum required ratio is practically zero. The actual ratio is over 100%. In other words, the total, your bank deposits in Europe banks are holding more reserves than they have deposits. And in fact, the ECB only recently has been writing papers about the problem of excess bank liquidity. So whatever else they may tell you about ECB digital currencies' advantages, it can't be any safer than bank deposits. They're already 100+% backed by the same stuff and insured. How much safety do you want? So the risk thing isn't a factor.
Okay, it isn't a factor. How about, for example, the confidence argument? Because CBDCs are backed by central banks, confidence in their value should be higher than physical cash or that held by a bank, eliminates the risks of a commercial bank collapsing.
Well, if your commercial bank manages to collapse, and they do occasionally, but you're insured, which most people are, then there is no risk. And there is risk for other bank creditors, there's risk for bank shareholders, and there's risk for some depositors, because deposit insurance is not covering all accounts all the time. But for the vast majority of people, there is absolutely no reason to be any more confident in a central bank digital currency, other things equal, than in your bank deposit that you hold today at an ordinary commercial bank. I personally had bank deposits in a bank in Georgia where I taught for many years, and I think my bank failed about 3 times. Each time it failed, another bank took over. I never noticed. One day I would go to the bank and there would be another name up there. Or maybe the Federal Deposit Insurance Company was temporarily running the bank. But as far as I was concerned, I bore no risk at all. And that's true for most people in most countries today. We can talk about the problems of deposit insurance, but none of the central bank proponents of digital currency, of central bank digital currency, are claiming that it would replace deposit insurance. None. So as long as deposit insurance is going to be there, it cannot offer much of an advantage over insured bank deposits.
Alana, you wanted to comment on this?
We know that there is a model of economy which is risk-free, and it is the economy from which we liberated in 1990. So this is the only way to have complete zero risk, to have everything centralized and planned. But I wanted to draw our attention to the geopolitical argument and the argument of sovereignty, because it's very important in the debate about CBDC. We know that China, India are, ahead of European states and America in the endeavors to introduce CBDC. And in a way, it reminds me situation before the World War I, when all European countries were prepared for the war, and there was the question, who has to attack first, not to be defeated. So in a way, all other central banks are
do not want to lag behind, is what you're saying.
Yes. Many central banks are now in this process because they are scared to be left behind. There is, of course, this question of sovereignty, but we have to know what are the costs, because cost-benefit analysis must be presented to the public, especially since there is a special feature of this new currency. It should be free for people to use.
Yes, and it's one of the arguments of the proponents of central banks. Using payments, using a CBDC would be less expensive than the status quo.
It would be not expensive at all.
Potentially reduce the net transaction costs, benefiting lower income households. There are no fees. CBDC will reduce your costs as there are no fees charged for the CBDC transactions, payments and transfers. It is a good argument, isn't it?
Let me make a point. We know that the main function of money is to be a measure of scarce resources. So if we speak about money which will not be scarce, there is a problem in fundamentals.
I was catching up this morning for the purpose of this talk on the latest arguments for central bank digital currency, and so I saw quite a few of these arguments. And I honestly was hoping I would encounter some compelling ones. And I feel a little bit embarrassed. I think we all feel a little bit embarrassed, but certainly Elena and I were embarrassed to discover that neither of us had much good to say about digital currency and that we might be repeating each other's thoughts. But this is very important. Yes, to justify any public policy, we should expect public authorities to show that they bring benefits that exceed the costs. Well, first of all, you will search high and low, I have, among the writings of central bankers, no matter what stage of their central bank digital currencies projects they're at, and you will not find the least hint of a disclosure of their estimate of the costs. I don't mean the risks. I mean the plain old costs of developing these projects. How much are they paying economists, consultants, people on their own staff to develop these currencies? How much will it cost banks and merchants or others to implement them? Or, if they're not going to charge any fees, how much is it going to cost taxpayers? Because someone has to bear the fees of the use of these currencies. They are not free goods. Nothing is free.
But if you're saying there are no costs...
no, I'm saying there's no disclosure of the costs.
Yeah, they are not disclosed. We cannot know yet if they will be higher.
That's right.
Than the
Even if we had tons of benefits that we were regaled with of these currencies, without having any notion of the costs involved of developing them, we still can't be sure that they will add value. But, in fact, and I know it's going to be a point that I belabor, but in fact, no convincing argument has been made about their benefits. I just want to address the question of costs. The statement was made that it has been said that proponents of central bank digital currencies claim that they will allow people to transact for less. Since this is a technology that already exists, that is essentially the same technology that banks rely on, and indeed there is no such thing as a technology of payments that central banks alone have access to. They have monopoly power, that's different. They have special privileges, but they don't have access to technologies that can't be developed and haven't been developed elsewhere. No one would be talking about central bank digital currency if this idea hadn't been developed outside of central banking systems. No central banker thought this up. Now, given that that's so, there's nothing they can technically do more cheaply than private sector firms can do in the way of digital transactions. There's nothing. What they can do is shift the costs from the users to taxpayers through the subsidies that they're very capable of relying upon, which they pay out of inflation or seigniorage revenues, ultimately by extracting resources from the general public. Then they can make things look cheaper, but they aren't technically cheaper for them to provide.
What are you essentially saying? That central banks are doing this to raise their prestige, to sort of prove that they're still relevant? Is that
of course, there is a competition, there is a geopolitical competition, and also we should draw attention to the question of privacy, because we know that if China develops CBDC and they can centralize information, because it's not based on blockchain, so you can centralize information about any transaction. And we know how they could use that. So, for example, in Europe, it is based on a promise that this information will not be disclosed, that it will be kept secret. But we know that there will always be a temptation. If there is a pool of information which is so sensitive, there will always be a temptation, and we cannot guarantee that, in 10 years, someone will not change the regulation and would not implement completely different rules. What is also important is that, at least in Europe, there is a serious discussion that CBDC will be an non-interest bearing currency, which means that you cannot earn on your CBDC, so it will not be actually a mean of saving then, right? And there is also a discussion, it's not yet decided, fortunately. It could be a programmable currency, which means that you get money in your pocket, for example, from state authority, like Pashalpa or something, and it has a program. You have to spend it before Christmas, or you cannot spend it on certain goods. So all of these are discussed in all of these central banks, should we do this? And of course we know that it's always attempting, someone in power, it will always be attempting to manipulate and to architect, to have social architecture. So even these discussions, I think, are dangerous. And to imagine a currency which is non-interest bearing, for me, it's a contradiction in terms.
If we move away a little bit for now from digital currencies, can we take any other examples? Elena, I think when we talked about this discussion earlier on, you mentioned the currency wars and the parallel here. What is the parallel? Take us back to the very beginning of the Institute.
Yeah, that's a long story, and the main parallel is that when the Institute was promoting the idea of currency board, which safeguarded litas for 21 years from any monetary policy, the main argument of the central bankers was that we need a sovereign classical monetary policy. Don't tie our hands, we want to have it. And of course we learned in the course of history that there were many times when they would use those hands, because there was a bank failure, there was treasury problems, there were Russian crisis and all other things going on. And eventually even the enemies of the currency board started to admit that this anchor really keeps us safe. And we were just discussing at the table that we all know that Lithuania now is the wealthiest post-socialist country in Europe. And guess why? I think our litas is one of the reasons, because litas was first anchored with US dollar, and US dollar was appreciating all the time. And then litas was repacked to euro, and euro started to appreciate against dollar. And of course it was hard time for industry, and there were a lot of voices saying that, we need to devalue our currency to have good exports. But now we have flourishing export industry, and we have the highest per capita income in Lithuania, because our money were never devalued. Our money was always gaining in their purchasing power. And now we come to a most interesting point, that George was
the one to advise to have one, the currency board.
Yes, we learned about the idea how to solve the problem in after socialist economy, with this risk of central bank running classical monetary policy. We learned about this possibility from George and his colleagues, Kurt Schuller and Steve Hanke. And
who came to Lithuania back in 1990 and 91. Tell us what happened. How did you push the idea? How did it all go?
Oh, unsuccessfully. We came in 1990, Kurt Schuller and I, and both of us had worked for the same, studied with and worked with a man named John Greenwood in Hong Kong. John was the mastermind behind the pegging of the Hong Kong dollar to the US dollar, which is still the arrangement. That was done in 1982, and it has held out to this day through many, many crises. And so we knew what had been done for Hong Kong successfully. I had been with John for a summer, and I told John when he was asking who to invite next, I say, well, there's this guy, Kurt Schuler, I think you need him. And so both of us had that very special experience because nobody was proposing a currency board, well, for anything at that time, certainly not for the post-Soviet republics. But we realized that what had worked to stabilize the Hong Kong currency could also be a useful way to launch a new currency, an independent currency, without it flopping. Unfortunately, by the time we got here, a lot of maneuvering had been done already ahead of us to establish the central bank currency that would not be governed on currency board principles. And I remember doing an interview with a newspaper I'm told many of you hate, but which was still a very popular newspaper.
Respublika?
Yes, that one. I wasn't going to mention it
Everybody knows.
For fear of offending people. But anyway, there weren't very many newspapers back then, and
it's a very marginal yellow press kind of a paper. Right now. We don't even.
Yes, but back then it was pretty prominent. I think it was actually the largest circulation paper, and it had a headline. And Kurt and I were in a picture with the headline saying, "Your currency reform will not work, and when it fails, you will come back to this idea we're proposing because it's the only thing that's likely to work." So in the long run, we failed in the short run. But in the long run, we kind of got what we wanted, except for not getting enough credit.
But you're getting all the credit now. Let's give him a big round of applause. So you have it forever.
I have a special credit for you, a special coin by the Lithuanian Central Bank. It is with our national herb, Vitis, and it was issued in 2015, the year when Lithuania joined Euro.
Yes, Euro, yes.
So I think we were one of the countries who joined with the most healthy background, and so thank you.
Oh my goodness!
Will you take a gift from the central bank?
Now, this is my share of all the wealth my ideas helped create here, and I'm still very grateful for it. Thank you, Elena.
Thank you. Thank you so much.
I just wanted to add one little footnote to this that may interest you all. In 1992, when we proposed the currency board in our early trips, we proposed a link to the German mark, because at that time it was the closest thing to a European currency. But in 1992, I published an article in the Wall Street Journal where I said that what the former Soviet republics should do is establish Euro currency boards or ECU currency boards. The ECU, or what became the Euro, same thing, already existed in bonds. It was not a currency. If Lithuania had done that, you'd have had a Euro all along with your currency board, and you wouldn't have had to listen to the ECB as you do now.
And of course, I should mention that most people know the currency board under the name of Litas credibility law, because that was the constitution of money. And the basic problem with the traditional central bank money that there is no constitution, there is no rules.
I wanted to tie this currency board story back into the digital currency with reference to the whole question, why are central banks promoting this? Because, when you hear me or anyone else say there's no good reason for it, you have the right to ask why they're doing it, and it is a very good question. And I think that, unfortunately or not, the answer doesn't lie in technology or even in economics. You have to think about politics and symbols. When we were proposing the currency board idea, and for quite a long time afterwards, as Elena pointed out, we had fervent opposition from central bankers and from many other people, academic experts, etc., to the idea because their view was that a national independent currency is a symbol of sovereignty, like having a flag or an anthem. And so, as far as they were concerned, the currency board was a threat to sovereignty. Now, I think that's a ridiculous idea. I think currency shouldn't be...
But Lithuanians still remembered the golden money,
yes,
in the interim war. So it helped us to speak to the public saying that, we had money which had constitution, which had anchor, and you remember that.
Right, but when you're linking to a foreign currency, that's where they say, well, now you're yielding sovereignty. You're being run by the German central bank or by the European central. Of course, now you're run by the euro. Nobody complains about it. But the point is that there is this nationalistic, patriotic notion, and central bankers play a part in this because they see themselves as agents of sovereignty. They're part of what it means to be a nation. Their money represents the nation in the way so many flags does. Every little banknote that a central bank issues, they think is a little flag out there being waved for whatever polity they represent. The analogy with digital currency is similar. Seeing the use of their little paper flags diminish, they want to have something else that takes its place, that's in the hands of the general public, so that everybody is still, as it were, a flag bearer for the central bank. I really do believe that this is how they think, and you do occasionally encounter statements by them that more or less admit it, but it's relatively rare. Most of the time they try to rationalize central bank digital currencies with other economic arguments.
Elena has taken us back to the celebratory note by giving you the coin, but now you have taken us back to the CBDC hatred conversation. I'm going to close this down and open this up for public. If there are questions, if there's a question or two or a comment or an idea that you want to propose. I saw some people were clapping, meaning probably that they were agreeing with you, but there might be people completely disagreeing. If you want to make a comment, if you want to ask a question, you can also do that, over coffee and drinks and everything. But if you want to say something now, that would be the good and only a possibility. No, everyone just wants to talk among themselves, which is lovely, which is fine.
Maybe somebody has some questions. Doesn't anybody have a question? There you go.
Yay, we've got a question. Do you have a microphone?
As a complete layman, just to propose one argument why this sounds like a good idea. Opening a bank account with a commercial bank is not a simple task. Probably because of the regulations which are being created and thrown upon the commercial banks. Wouldn't it be great if the central bank would have, just like providing a passport as an identity for every person of a country or European Union, would provide a bank account to every person and company automatically, and through that bank account would handle the payments all over the place, just as a basic commodity without the problem.
Thank you, Antanas Anskaitis. Elena wants to comment on this.
Yeah, we face here the problem of over-regulation. We have so many regulations, AML and KIC and all other regulations, which makes opening an account so difficult. So the question first is, would the central bank follow the same regulations? If they did, I'm afraid it will be much more bureaucratical, right? And if we don't need those regulations, if a person opens an account in a central bank, why then do we need them with a commercial bank? So you raise a very appropriate point, and I hope that there will be a lot of discussions about this topic.
Did you want to comment very briefly?
Yes, of course I do. I always have stuff to say. The argument that central bank digital currency accounts could allow people who presently don't have bank accounts to have bank accounts is one of the very popular arguments that central bankers are making. But it's not a very good argument for several reasons. First of all, it should be pointed out that for most well-to-do societies, only a very small percentage of the population, usually 1 or 2%, not much more, doesn't have bank accounts. And polls and surveys have been done asking why these people don't have accounts. And the main reason, in the United States, about 36% of the people who don't have bank accounts say they don't trust banks. And they're not going to trust central banks for the same reasons, because they're not worried about bank failures. They just don't like keeping accounts. This is probably why in Nigeria, where they thought they have plenty of unbanked people, they thought the e-naira would take off because of this, and it didn't. Now, it's true that you have some people who don't open accounts simply because the costs of doing so are too high for them, or there's a minimum balance requirement that they are unable to maintain. There are much easier ways to deal with that problem than to come up with a whole new kind of central bank apparatus. It's very expensive to launch, and then you have to get you pose all these risks. All they have to do, and they're already doing this in many countries, is have special programs that subsidize bank accounts at ordinary banks. And they can do that very easily. You don't need CBDC to make it possible for people to afford to have a bank account. You just can do it directly with a subsidy for that purpose.
Let's stop right here. Let's go back to the birthday celebrations. Let's all network and eat and drink and have fun. Just before we go, just let us say just one word. What would that be? What would you wish for the Institute for the next 33 years? Just to bring back the celebratory mood in. Antanas has said that it might be a weird way to celebrate the 33rd birthday, but I think it really coincides with what Elena said in the beginning, that content is the core of the events of the Institute. So here is that, Antanas. What is that one word that you would wish the Institute?
I wish that in 33 years or earlier we have free market established in Lithuania, because then we can get on pension.
George?
I wish that it won't be another 33 years before I come back to Lithuania.
We'll be eagerly waiting for you earlier. Thank you so much, George Seljan, Elena Leontieva, and your big round of applause.